Today we're discussing PayNetwork, a cryptocurrency we've talked about several times since it reached this low point. As we mentioned previously, when it reached these levels, specifically around the 20-cent mark, the coin was moving within a clear descending channel. But over time, the downward pressure gradually weakened. The price began moving sideways on the weekly time frame, and we started observing a clear pattern of price action from this low. Rising, then falling, then rising again, then falling again. This price action is one of the clearest examples of consolidation before a breakout. As we mentioned earlier, on the weekly time frame, most cryptocurrencies don't break out directly from a single low, except in very rare cases. The vast majority of cryptocurrencies need to retest the low, and we might see what's known as a double bottom. Sometimes a false breakout occurs below the support level, where the price drops below the support briefly and then quickly rebounds above. These movements aren't a sign of weakness. On the contrary, they are among the strongest indicators that buyers are emerging and that selling pressure is gradually easing. The PayNetwork is now nearing a breakout from its descending channel, having formed a clear ABC pattern during the decline. The length of the first wave is almost identical to the length of the last, which is very significant from a technical perspective. The second wave appeared as a consolidation within a sloping channel, and we didn't witness the impulsive drop seen in the first wave. This is a clear indication of weakening sellers and the gradual entry of buyers. These patterns often form at the end of a downtrend and before any significant upward movement, making the coming period crucial. A very important point: capital management. No one should allocate more than 5% of their portfolio to any cryptocurrency, regardless of its strength. For a cryptocurrency like PayNetwork, given its associated risk, yes, we might see sudden power candles, as we've seen with many cryptocurrencies before. Daily candles that rise by 100% or even 150% in a single day. The currency might reach levels like 47 cents or more in a single candle, which is quite common in the cryptocurrency market. However, a strong warning is necessary. Any sharp rise in a single day should be treated with extreme caution. Daily power candles are often followed by a sharp correction the next day, which can reach 30%, 40%, or even 50%. Therefore, anyone who makes a quick profit from a strong impulsive candle should exit immediately and avoid greed. Then buy back in after the correction. Many cryptocurrencies that have surged from the bottom have returned to test the same bottom or close to it before a true long-term rally. But if the rise is gradual over a week or more, with consecutive healthy candles, then it's advisable to continue and avoid a hasty exit. We are approaching the end of the month, with only a few days left. The last week of the month is often a turning point in the market. By the end of the month, cryptocurrencies are expected to begin a gradual recovery from their current levels. As we mentioned earlier, Some cryptocurrencies are still holding above their lows. Others are stuck at the wall of a descending channel, and some are still below their bottoms. All of them are waiting for a single move to determine the direction. The acquisition of Bitcoin is currently the primary factor influencing the market, and its impact may even be greater than Bitcoin's price movement itself. By the end of the month, the picture should become clearer, and we should start to see stronger price movements. In conclusion, I reiterate and emphasize, capital management is fundamental. The most powerful cryptocurrency should not exceed 5% of your portfolio. High-risk cryptocurrencies such as PayNetwork should not exceed 2 to 3% at most. The market is full of opportunities, but a mistake in capital management could push you out of the market entirely before the real wave begins.